Guys, this is the weekly chart of S&P 500 and these are the weekly candles. And last week S&P 500 gave a good red candle. This red candle on the weekly chart was very well predicted in my previous S&P 500 weekly technical analysis. There was a technical reason for that, and the technical reason was that the K and the D channels of the stochastic RSI were at absolute 100 on the weekly chart. That is why a red candle on the weekly chart was expected and was highly likely. Other than that, the shape of the candle was supposed to be like this, a small wick and then a good red body. So it's a good bearish candle, only the little wick is missing. Other than that, it was supposed to come down to a little more like 4310. So it was confirmed that on Tuesday a bear candle, most likely or highly likely a bear candle, a red candle will be formed on Tuesday. So there was a red candle on Tuesday. Other than that, I have mentioned this thing that 4396. If the open of the S&P 500 comes below 4396, in that case 4396, and in the bearish side it will be 4371. And if you notice, the high of the candle was 4400 and the low of the candle was 4367. Only a difference of 4 points, plus minus 4 points, else it remained between, else S&P 500 moved exactly as was predicted in the pre-market update. Now another red candle on Wednesday, and the high was 4386 and the low was 4360. Now through my first update to my community members, it was clear that now at most 4380 in the bull side, plus minus 2-4 points, okay. This means that the S&P 500 will remain between 4380 and 4351, 4343 with a little fluctuation that will be acceptable. So you can see 4386, 4360. So on Wednesday it moved as it was expected. Now on Thursday we have seen a good bullish candle, a good green candle. However, in actual this bullish candle was supportive of the bearish movement, and that what you have seen on Friday. In my pre-market update on Thursday to my community members, it was expected that, it was clear that we are expecting the S&P 500 will open around 4351. If the S&P 500 opens above 4351, in that case this can simply change the picture. Change the picture means there will be a bullish reversal up to 4371. But what happens between 4371 and 4396, it will be a different condition. And the other most important part that was that through the 4-hourly chart there was a saturation in the bearish side. That is why a reversal was anticipated intraday. So this green candle you are seeing, this was the result of the 4-hourly candle that was saturated in the bearish side. That is why in my final update to my community members on Thursday before the closing of the stock market, I mentioned that closing of the S&P 500 and Dow Jones as green. Green candle means the bearishness seen this week will continue. And now you have seen the result of that. On Friday, another, this is the bearish candle, a good gap down open and a red candle. Now Tuesday, Wednesday, Thursday, Friday, movement of the S&P 500 was as expected and as predicted. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. And the agenda, the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So weekly chart means the big picture. Last week I mentioned that we are going to see a good red candle, and if all goes well as per the technical, then there will be a wick and a good body. So I will do the technical analysis on the weekly chart, and I will tell you that what through the technicals what we are expecting in the coming week, what is expected to happen in this the coming week. And not just for this the coming week, but what is expected to happen in the month, in the next month, or in the next quarter, right? Then the second point of the agenda of this S&P 500 weekly technical analysis is the support and resistance levels for the S&P 500. So last week we were expecting the profit booking to happen, but the profit booking was not seen. Rather, it came down slowly as per the technicals. And there were excellent chances yesterday on Friday for this profit booking, but it has failed actually because of the S&P 500. However, the Dow Jones was in this the perfect condition of the profit booking, but the S&P 500, it simply cancelled the condition of the profit booking. However, the levels they worked as were supposed to be: 4396, 4371, 4351, then 4343. So I will give you the support and resistance levels for the coming week, and let's And through these, the support and resistance levels, we will come to know that where the S&P 500 is heading to. Then comes the third point of the agenda of this S&P 500 weekly technical analysis. And in the third point of the agenda, I will do the technical analysis of the S&P 500 on the daily chart. See, this was the weekly chart. Weekly chart means the big picture, right? For a week, for a month, for a quarter. The daily chart means a picture like for up to a week, for 2 weeks. So I will do the technical analysis and I will tell you that what we are expecting through the technicals on the daily chart, whether the S&P 500 has any chances to hold, or if the technicals have changed. And because of the change in technicals, are we expecting any good movement in the S&P 500, right? So for your information that yes, the technicals have changed for the S&P 500 and the Dow Jones on the daily chart. Now the fourth point of the agenda is of this S&P 500 weekly technical analysis is the probable movement of the S&P 500 from June 26th, that will be Monday, through June 30th, that will be Friday. So what is going to happen in the S&P 500 on the daily basis from Monday through Friday, from June 26th through June 30th, that I will tell you in the fourth point of the agenda. So guys, if you have not yet joined my Patreon community, then you can join my Patreon community for the daily analysis, the daily updates of the S&P 500. I have given the link in the description of the video and also in the comment section. Now guys, I am going to talk about the first point of the agenda of this S&P 500 weekly technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. This is the weekly chart. Let me write it down. W as in weekly chart. Weekly chart means that the one candle represents 1 week, not 1 hour or 1 day. One candle means 1 week. Okay. So let's first interpret the candle itself. It's a bearish candle, a red candle, a good red candle. Okay. But it's not a heavy bearish candle, a very heavy bearish candle. Secondly, the closing of the candle was still above the open of the previous weekly candle of the S&P 500, right? This means that yes, there are bearish sentiments, no doubt. Okay. But these bearish sentiments are not that extremely heavy or not extremely heavy that can actually, like 100% trigger the profit booking or a very heavy or the extremely heavy fall in the S&P 500 and in the entire stock market, right? So this means that the bearish sentiments are there, more bearish candles are expected, and yes, and once again, okay, in the coming week, in the next week, okay, we can again anticipate another bearish or another red candle on the weekly chart of the S&P 500. Okay, this candle. So this candle is simply saying that thing. Now, this picture will be more clear through the Dow Jones. So this is the weekly chart of the Dow Jones, right? Now, if you look into this, the weekly chart of the Dow Jones, then what you are going to notice that the open of the candle, open of the weekly candle of the Dow Jones, open is equal to the high, So what actually is this the problem with the open equal to high, or what this the open equal to high? Okay, it suggests or it represents, okay, or what in the technical terms, okay, what it means. This simply means that the bearish sentiments were so heavy that the Dow Jones immediately upon open gave up, right? So first thing is clear that the bearish sentiments were very heavy, extremely heavy. And if you want to see this, the magic of this, then look into this, the bearish candle. This is the same bearish candle, open equal to high condition, what you have seen the next week. There was an open, it came down, and then only there was a reversal. Other than that, this was a bearish candle, again the open equal to high condition. Next week it moved up, but eventually it gave this the bearish candle or the bearish movement. This means that no matter what, the Dow Jones will further come down, S&P 500 will further come down. Yes, if there comes some saturation, on the daily chart, only the saturation can help the Dow Jones and the S&P 500 to get or to see a bullish retrace or a bullish reversal. To what levels it will retrace, that can be seen only on the day when it is actually saturating. So if you are my Patreon community member, then through the daily updates, you will come to know that on what particular day the S&P 500 or the Dow Jones has saturated, and on what particular day we are anticipating a bullish reversal. And this is the same thing I mentioned in my final update to my Patreon community members before the closing of the stock market yesterday, that this is the case. Now let's see what the technical indicators are saying about the S&P 500 on the weekly chart. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 is still trading in between the upper band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands on the weekly chart. Then comes the moving averages, clear fan out in the moving averages, and the S&P 500 on the weekly chart has closed above the moving averages. This means that the S&P 500 is clearly bullish on the weekly chart through the moving averages. Moving averages means EMA, exponential moving average, right? Then comes the Ichimoku cloud. Because the S&P 500 is still trading above the Ichimoku cloud on the weekly chart, this means that the S&P 500 is bullish through the Ichimoku cloud on the weekly chart. Now let's see what has changed or what is changing. If you look into the MACD, MACD is still more than the signal. This means that the S&P 500 is clearly bullish through the MACD. MACD means moving average convergence divergence. Now comes the stochastic RSI. So stochastic RSI, finally the K is less than the D. K is less than the D. It was supposed to be bearish. It was supposed to be a little bearish. Okay. However, because the K and the D both are still more than 90, this means that it will be considered as bullish. It will be considered as bullish or neutral, as simple as that, but not bearish. This means that we can say that the S&P 500 is still bullish or neutral through the stochastic RSI on the weekly chart. And if we look into the other technicals, then yes, the saturation is there, divergence is heavy and increasing. This means that the S&P 500 is bullish through the moving averages, Ichimoku cloud, this the Bollinger Bands, MACD, and partially bullish through the stochastic RSI. So overall, the S&P 500 is 90%. You can say that it is the 90% bullish on the weekly chart, but it is still in this the overbought and in the saturation. So I will tell you in the last point of the agenda, that is the probable movement of the S&P 500, that what needs to be done or what should be there in on these the charts through which the S&P 500 can come out of the overbought and the saturation, right? One more thing, guys, remember, as long as S&P 500 is trading above 4155, it will remain in the bullish trend. However, this is not a long-term bullish trend, this is a short-term bullish trend. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community in order to get the daily analysis, the daily updates of the S&P 500, then I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And in this, the second point of the agenda, I am going to talk about the support and resistance level. So the support and resistance levels, as of now, if you notice that the S&P 500, it tried to move up and it tried to breach and sustain above 4396. So in the bullish side, the condition is that it must sustain above 4396, then only it is allowed to move towards like 4425 or so. Okay, but before this, the 4396, we have 4371. 4371. Okay, the same condition is applicable. In order to move up, it must move up and hold and sustain above 4371 so that it can move towards 4396, and then to hold and sustain above 4396 so that it can move towards, okay, these are 4400, okay, 25, or these are levels, right? So technically, through the daily charts, the chances of seeing 4425 or anything above 4400 as of now, okay, are less. I'm not denying this thing that it cannot. It can only when there is, okay, only when one condition is there. One condition means when the S&P 500 or if you know both of these, the S&P 500 and the Dow Jones, both saturate on this or in this the bear side, in this the bearish side. Okay, when there comes a saturation in this the bearish side on the daily chart of the S&P 500 as well as on the daily chart of the Dow Jones, and by the time these the indices they saturate and these the indices are trading around 43, for example, S&P 500 is trading around 4350 or so, then only there are some chances, not okay, not heavy, but then only there are some chances that yes, it can move up or it can try to move up heavily. Okay, but in order to move up heavily, okay, it will be needing some like either very heavy manipulation, okay, just like we have seen here, or some news, some good news or extremely good news, particularly from the Federal Reserve side. yes, a movement towards 4396, okay, it may happen. But before that, okay, so 4396 will be the resistance, okay, a very good resistance. Before that, we have 4371. 4371 is the very first condition in order to move, okay, beyond 4371. So must hold and sustain. S&P 500 must hold and sustain above 4371. Okay. So that is the resistance. Then we have 4351, 4351, and immediately below that we have 4343, 4343. So this, okay, this zone, this very small zone that you are seeing here, okay. So if the S&P 500 comes below this the particular zone, in that case this zone, okay, because it is very heavy. Last time also we have seen that it has sustained. This time we are seeing, okay, that it is trying to sustain. If it comes down, in that case the zone itself, it will become a heavy resistance, okay. But for now this zone, because the S&P 500 has closed inside the zone, so this means that this zone is going to support, this zone is going to act as a support for the S&P 500. Then the next good support comes at 4310, 4310 and 4291. Again, this is a very good zone, very good zone from 4310 to 4291. Okay, not, so this is not a very heavy zone. Okay, I repeat, this is not a very heavy zone. This is a good support zone. The heavy zone is actually from 4291 to 4265. This is a very heavy zone. Why? Because we have seen that the S&P 500, okay, for 1, 2, 3, 4, 5, for 5 days, okay, it was there and it was oscillating between the 4265 and 4291. That is why this, the 4265 and 4291, it is a very heavy support zone, very heavy support zone. Or we can say that as long as S&P 500 is holding above this support zone, holding above this support zone, okay, there are chances that it can see a bullish retrace, or it can try to move up, or it can regain its okay, this is the short term bullish movement, right? But as soon as it comes below this the heavy support zone, in that case this side, okay, this is over, this is the short term bullish trend, okay, it is over, and whatever bullish is left will be there, and that will be there, okay, at least until 4155. So from 4155 to 4265, okay, this particular range, okay, this is normal bullish, okay, or light bullish, okay, this thing. Above 4265, this is the short term bullish trend, okay, or there are or this is a good bullish trend, okay, good bullish sentiments and so on, okay. Anyways, so I was talking about these support levels, 4265, yes. 4227 is an intermediate support zone, some support level, okay, good support level. Then 4207, okay, again this is the same. And guys, once again I repeat that these support and resistances that I am telling you, okay, here, these support and resistance levels are what I have calculated myself, okay. These are not the standard pivot levels that you can find through any technicals, but these are my calculated support and resistance levels, right? And the accuracy of these support and resistance levels is very high, more than 90 to 95%. Then comes the next support level, that is 4185, 4185, 4185, and then 4155. Now, what is so special about 4155 and 4185? The special thing is that the S&P 500, okay, sooner or later, when I say sooner or later, in next few days or 1 to 2 weeks or so, okay, it will be coming back to the 4185 and 4155, okay. And once it comes down and it holds and it sustains, then only, okay, it can think of like whether to move into this side or whether to move into, you know, this, then okay, this the bull side, right? So it's under, so it is under, for now it is under technical obligation to come down to 4291, 4265, and then it will be under the technical obligation to come to 4185 and 4155, okay. So yes, there might not be, you know, these back to back red candles, okay. It so it, means, you know, we can see, you know, a few, you know, green candles, okay, 1 2, and then are back to back red, then 1 or 2, you know, green candles or so, okay. So the movement now after 4155, then we have 4127, 4127, a very good support. And as soon as the S&P 500 okay, it comes down, then it will be hitting the Ichimoku cloud. This means that it will find another support through the through this the Ichimoku cloud along with these the calculated levels, okay. Then we have 4110, and then the 200 day EMA, 200-day EMA will come into the picture, and the 200-day EMA will provide the necessary or a very heavy support, okay, or a psychological support. 200-day EMA will reach to 4110. This means that yes, 4110 or around 4110 will be the very heavy, extremely heavy support for the S&P 500 for the next week. A breach of this will then bring it down to 4067, 4035. 4035 is the standard support zone, okay. And if you have subscribed to my YouTube channel for last many months or years, then you have seen the magic of 4035, okay. No matter that that what is the trend, okay, or what is the movement, whenever the S&P 500 comes down, it will hold around 4035 or hold at 4035 on the zone of 4035 for 2, 3, 4 days, okay. Just like, okay, when it was trying to move up, okay, at 4291, okay, it did the same. So just like 4291, 4035 is there in the bear side. Then we have 4000, okay. So next week, let's keep it up to 4000 level, right? Once again, guys, for those who do not know and who have not yet subscribed to my channel, then let me tell you that the S&P 500 is still under technical obligation to fulfill okay, this or to hit the 3972 level, okay. So it might not hit the 3972 immediately, but in next a few days or in the coming weeks, okay, it will hit the 3972, because there is a technical obligation, not actually a technical obligation, but that is an obligation that came because of the manipulation, okay. And as I mentioned earlier many a times, and I proved this theory, that whenever the S&P 500 is manipulated, okay, in that case, sooner or later it comes back to the levels from where it was manipulated. So 3972 is that level from where it was manipulated. This means that the S&P 500 will be back to 3972 sooner or later, in next few days, few weeks, but it will be back to 3972. Now guys, there is one more important thing, that if you want to join my Patreon community, then let me tell you that how you can join my Patreon community. So if you are looking for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market, then you are welcome to join my Patreon community. And in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. When you follow that link, then you will see this page. Okay, on this page you will see that there are these three levels, okay. So this is the first level and the second level, okay. This is about the daily S&P 500 updates from Monday through Friday, every day, pre-market update, first, second, third, fourth update, and the final update, okay. So the first one is the daily S&P 500 updates for non-US Canada residents. Means anyone who is not a resident of US or Canada can opt for this level, okay. Then comes the second one, that is the daily S&P 500 updates for US and Canada residents only. Then the third one is the stock market opportunities and daily updates. Means you will get the daily analysis, the daily updates of the S&P 500 from Monday through Friday as usual. Other than that, you will also get the stock market opportunities every week, minimum 5 to 10 opportunities, or up to 50 opportunities within a month, or in the premium stocks of the US stock market. And once you have joined my Patreon community, then you will be able to unlock all of these updates that I give on the daily basis to my Patreon community members. And guys, if you notice that many members have joined my Patreon community and they are getting these the daily updates, the daily analysis from Monday through Friday, as well as stocks, these the opportunities in the premium stocks of the US stock market for last many weeks, for last many months. So guys, once again, if you want to join my Patreon community, then you are welcome, and I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda, and the third point of the agenda is the S&P 500 technical analysis on the daily chart. This is the daily chart, okay. Daily chart means that the one candle represents one day, not 1 hour or 1 week. One candle means one day, okay. Now on the daily chart, let's first interpret the candle itself. So when you look into this, the candle, it's a bearish candle, okay. Although it looks like a spindle, but it's not a perfect spindle, okay. So that is why we are going to consider this as a small bearish candle. Small bearish candle means, yes, at the time of closing on Friday, there were the bearish sentiments in the S&P 500. However, there were very heavy bearish sentiments in the Dow Jones on the daily chart, because in case of the Dow Jones, the condition open equal to high was there, and the Dow Jones failed. It tried actually, but it failed again and again to clear or to cancel the condition of this open equal to high. This means that the bearish sentiments were there on Friday in the Dow Jones, okay, and in the S&P 500. Overall bearish sentiments. Okay. So on Monday, these the bearish sentiments, okay, will be there. Okay, if not for the entire day, then at least, okay, in the initial hour, okay, in like 15 minutes, 30 minutes or 1 hour, okay, these the bearish sentiments will be there. Now let's talk about the technical indicators on the daily chart, and something strange is happening here, okay, through the technicals. At first, this is the upper band of the Bollinger Band. This is the median of the Bollinger Bands. Because the S&P 500 is trading in between the upper band of the Bollinger Band and the median of the Bollinger Band on the daily chart, this means that the S&P 500 is bullish through the Bollinger Bands on the daily chart. Now comes the moving averages. Because there is still a clear fan out in the moving averages, secondly, the S&P 500 was able to, surprisingly, it was able to close above the moving average by just a few cents. This means that the S&P 500 is still bullish through the moving averages on the daily chart. Then comes the Ichimoku cloud. Because the S&P 500 is still trading above the Ichimoku cloud on the daily chart, this means that the S&P 500 is still bullish through the Ichimoku cloud on the daily chart. Now what has changed? Now if you notice the MACD is marginally more than the signal. MACD is 58.39 and the signal is 58.17 and only like, okay, 0.21, that's it. Okay, so why you have seen this, the very small movement, okay, this is the very small movement on Friday. Why the S&P 500 was so reluctant to give up, and why the open equal to high condition was cancelled. So I have given this the very important update to my community members around 11 a.m. Eastern time or 11:30 a.m. Eastern time, okay, yesterday on Friday. Now the question that we are discussing here is that why the S&P 500 is holding and unwilling to go down. The technical reason was that as soon as there comes a fall that is more than 1%, then it will trigger a bearish crossover in the MACD. And when that happens, then the MACD will align with the already bearish stochastic RSI. This means that now stochastic RSI and the MACD both are bearish, means heavy bearishness that can even give a gap down open, right? Now, if you see that the MACD is still more than the signal by just by 0.21%. Just by 0.21, right? So this whole exercise that the S&P 500, okay, it was reluctant to come down, was because if it further comes down, if the S&P 500, if it gives up more than 1%, in that case there will be a crossover in the MACD. Okay, in that case the MACD will become bearish, right? So this is one important thing that I am going to discuss in detail in the next point of the agenda of this S&P 500 weekly technical analysis. Okay, that what will be the implications of this. So as of now it is bullish. Now comes the stochastic RSI. Because the K channel is less than the D channel, okay, in case of the stochastic RSI, this means that through the stochastic RSI, S&P 500 is clearly bearish on the daily chart. Okay, and through the MACD, S&P 500 is clearly bullish on the daily chart. Other than that, the divergence is heavy and the volatility is still there. Okay, all of the technical indicators are good. Overall, what we have seen is that the S&P 500 is bullish through the Ichimoku cloud, Bollinger Bands and the moving averages, right? Then the S&P 500 is bearish, clearly bearish through the stochastic RSI. Okay, now two things. Number one is the MACD S&P 500. Okay, surprisingly, because it failed to come down, okay, a little more. That is why it is still bullish through the MACD, and also because it has survived just, okay, minutely over this the moving average on the daily chart. Okay, that is again, okay, an important thing. That is why it is still bullish through the moving averages. Okay, So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community, and I've given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. So in this, the last point of the agenda, I will give you the probable movement of the S&P 500 for the week of June 26th, 2023. That is from June 26th, which is Monday, through June 30th, that will be Friday. So what is going to happen in the S&P 500 from Monday through Friday until June 30th, that I will tell you through this, the S&P 500 weekly technical analysis. Now, a few things. Okay, number one, the Federal Reserve Chairman, okay. So he has testified to the Senate and to the Congress. Now the good thing is that the Federal Reserve Chairman, he has not deviated, okay, from his earlier remarks that he has gave in his press conference in the last week, okay, after the FOMC meeting, when the Feds have decided to not to raise the interest rates. And he has mentioned that there will be a mild recession because the economy is going to slow down, okay. GDP growth will be below average. So the recession will be there, okay, for 12 to 15 months, okay, or like approximately 1 year, okay. It will not be a heavy recession, but it will be a mild recession, okay, 1 year or so. And on the inflation part, okay, he was very much clear that the Feds are still uncertain on the inflation, that yes, the inflation has moderated, but not to the levels as were expected by the Feds. This means that it's still a long way to go before the inflation comes under control, okay. And as of now, there is a lot of uncertainty, and that the rate hikes will be there, confirmed, but at the moderate pace, okay. And other than that, the Feds are nearing to the rate hikes, but the rate hikes will be there and will be data driven. And then the Federal Reserve Chairman has confirmed that yes, all of the committee members in the FOMC, Federal Open Market Committee, all of the committee members are in favor of 2 rate hikes, okay, by the end of this year or before the end of this year. Means in the next 6 months, 2 more rate hikes will be there. And this is the best case scenario. Remember, the 2 more rate hikes is the best case scenario. Best case scenario means if everything goes as per the plan, and if the inflation further comes down, if the labor market, okay, labor market as of now is very, very strong, okay. Unemployment rate is at the historical lows. So when this thing change, okay, when the unemployment rate increases and the conditions in the labor market changes, inflation comes down, okay. So and then there comes this the GDP growth rate at the below levels, okay. Means so that is the best case scenario. If everything goes as planned, then we are expecting 2 more rate hikes, okay. However, there will be, or there can be, a maximum of 5 to 6 rate hikes if there comes a worst case scenario. What will be the worst case scenario? Worst case scenario, if the inflation moves up, if there comes a bullish reversal in the inflation, if the labor market remains strong, very strong, if the unemployment rate, it remains at the historical lows, and if nothing goes as planned. So overall, the thing is clear that even in the best case scenario, there will be 2 more rate hikes, okay, 25 minimum. Best case scenario means there will be a 50 BPS rate hike. The worst case scenario is 5 to 6 rate hikes, okay. And because Feds might not meet in the month of August, this means that 5, okay. And yes, 5 to 6, and yes, 50 BPS can still be seen only and only if there comes a worst case scenario, when everything goes against okay, what the Feds have planned for, right. So that is the worst case scenario. This means that by the end of the year, 2 to 5, okay, minimum 2, maximum 5 rate hikes will be there by the end of this year, okay. Anything between 2 to 5. So this is confirmed. This means that yes, the economy is heading to the recession, okay, no doubt about that. That is again confirmed by the Federal Reserve Chairman, okay, by mentioning that the GDP will remain below the average level for substantial period, okay. And yes, one more thing that the Federal Reserve Chairman has confirmed, that the Feds will go for the rate cuts. Feds will go for the rate cuts when? Feds will go for the rate cuts in quarter 4 of 2024. This means that the Feds will go for the rate cuts after 15 months from now. This is the month of June. Okay. So in the month of anytime from October, October 2024, okay, the Feds will go for the rate cuts. This means that the rate cuts will be there only after 15 months. Yes, before October 2024, see, in actual, the Federal Reserve Chairman, okay, he has used the word by the end of 2024. Okay, but I'm considering the best case scenario. Okay, that from October, otherwise, okay, we can say like November, December only the Feds can go for the rate cuts. Okay, so this means that by raising the interest rates, okay, this year, the Feds might not raise the interest rates, okay, in the first, second and third for these the 3 quarters of the 2024, and then in the quarter 4 the Feds will go for the rate cuts. Okay, so this is a confirmation that yes, the recession will be there, and recession will be there for minimum 12 months. Okay, a mild recession for 1 year, that will be there. Okay, and when the Feds they start, okay, this thing, the rate cuts, okay, and that point of time, or by the quarter 1 of 2025, okay, we can expect that the economy will start there's the recovery. Okay, and then it will start to come out of the recession, right? So now this thing is confirmed, and I hope this thing is clear. The long term picture is clear. Okay, and in terms of the numbers, in terms of the S&P 500, in terms of the numbers, okay, 3,500, okay, this is as per the plan and as per the Fed's best case scenario. 3,000, okay, it is there. So yes, during this the recession, okay, 3,500, 3,000, okay, it will be there, right? And yes, if the recession, if it changes from mild to severe, in that case it will be like 2,600, okay, 2,500, 2,600, okay, it will be there. So that is the 200 months moving average on the monthly chart. Okay, approximately 2,500 or so. Okay, that will be there. Now the second part is that, as I've shown you on this the weekly chart of the Dow Jones, that because we have seen, okay, the heavy candle of the Dow Jones, heavy bearish candle of the Dow Jones, okay, and there were these the two characteristics of the candle. Okay, number one was the open equal to high condition. It has fulfilled the open equal to high condition. That itself means there were very heavy bearish sentiments. Number two condition is that the closing of the candle was below the open and the below of the low of the previous candle. Okay, these two conditions through the Dow Jones on the weekly chart says that there are very heavy bearish sentiments on the weekly chart of the Dow Jones, right? Clear? So this means that yes, through the Dow Jones, because Dow Jones, okay, it is seen as the face of the economy. Okay, not always, but many a times Dow Jones. Okay, see, the difference is that the Dow Jones, okay, Dow Jones is a collection of 30 blue chips stocks. 30 blue chips. Okay, means the most valuable companies of the world. 30 most valuable companies of the world. That is the Dow Jones. Whereas the SP500 is a collection of 505 companies, and the Nasdaq, okay, 101 companies or 102 companies. But the problem with the S&P 500 and the Nasdaq is that Nasdaq is like it is purely tech companies. Okay, almost like 95-97% purely tech companies. S&P 500 it is heavily influenced by the tech companies, because the top 30% or 35% top, okay, the weight is top 30% or 35% weight is, okay, it is through the tech companies. Okay, that is why you will see that the Dow Jones, okay, it moved up, but it did not move up as compared to this the S&P 500. S&P 500 it moved up like back to back. It was heavily manipulated, okay, through the tech companies. And which tech companies? Amazon and Apple. Okay, these two tech companies. And this means that when the recession comes, then Amazon and Apple, okay, these will be the two companies that are going to lose the most, right? Now comes yes, so the Dow Jones. So the Dow Jones, the movement of the Dow Jones, okay, it was normal. So as I mentioned to my community members, that it will be the Nasdaq that will take a very heavy hit, extremely heavy hit, means the Nasdaq will fall heavily. Okay, then it will be followed by the S&P 500. S&P 500 will fall, okay, not to the levels in terms of the percentage, okay, as the Nasdaq, okay, but like 60 to 70% of the Nasdaq, okay. Then the Dow Jones. So Dow Jones will be like 40 to 50% of the Nasdaq levels. So Nasdaq, if the Nasdaq, okay, if it goes by 10%, then the Dow Jones will fall by 5%, and the S&P 500 will fall by 7% or so, okay. So it is the Nasdaq that is heavily saturated and in the heavily overbought condition, okay. So I hope the second point is clear, that because of the Dow Jones, okay, there are very heavy bearish sentiments, and the same heavy, not very heavy, but heavy bearish sentiments are seen through this the weekly chart of the S&P 500. The third thing is that the next week on Wednesday and Thursday, the Federal Reserve Chairman, okay, I think there is a press conference of the Federal Reserve Chairman, okay, he will speak again, okay, but because he has not deviated, okay, when he was when he testified to the Congress and the Senate, and also, okay, whatever he has mentioned in his the press conference after the FOMC, okay, release, okay, there's a press note release, okay. This means that there are very less chances that he will deviate, okay. Yes, one more thing I forgot to mention here: the banks, the bank and the banking sector, okay. So the Feds and the Congress and the Senate, means the Federal Reserve and the government, okay, they are very much concerned about the banks. And yes, the Federal Reserve Chairman himself has admitted and accepted the fact that yes, there are some banks, not one or two, but there are some banks that are heavily exposed, okay, in the market. And this means that when the recession begins, and because of this the rate hike, okay, these banks, okay, they are supposed to fail, and they will fail. However, an immediate fail like the Silicon Valley Bank, that will not be there. There will be a sequential fail. These banks will fail, but they will fail sequentially. And yes, one more thing, he has confirmed that no big bank like JP Morgan or Barclays, okay, or means these kind of banks, okay, they are not supposed to fail. And they might be exposed, but they have very well they have very well what we say, hedged their position, right? So that is there. So banks, okay, again a concern, and more banks will fail, small banks will fail, okay, that is again confirmed by the Federal Reserve Chairman himself, okay. So recession, bank failure, and this thing, okay, means a lot of mess that will be seen, okay, in next one year or 1.5 years, okay. We will all see, okay, that this all of this thing. Three things. Number 4. Now the fourth and the last thing is that the PCE data, the personal consumption expenditure data, that Feds consider and Feds value heavily. There's the PCE and the core PCE data. The PCE and the core PCE data, it will be published on next Friday. Friday is June 30th. So on June 30th, Friday, the movement of the S&P 500 and the movement of the Dow Jones and the Nasdaq and the entire US stock market will be heavily impacted and affected by the PCE and the core PCE data. Okay, remember what I mentioned here, that the Feds have not raised. I'm not saying paused. Okay, I will go by the words of the Federal Reserve Chairman, that the Feds have that the Feds are not saying that this is a pause. No, Feds are simply saying that they have not raised the interest rates this time, because they want to see that what are the effects, what is the impact of the previous rate hikes, okay. This means that if the PCE and the core PCE data, if it declines further, a positive news for the entire US stock market, okay. This means that yes, this news can give a bullish movement to the S&P 500, to the Dow Jones, to the Nasdaq, and to the entire US stock market. But an increase, any bullish reversal in the PCE and the core PCE data, see guys, I do not know that what will be the actual data, okay, and I do not speculate, and I do not want to speculate, okay. I am simply telling you these outcomes. If there comes a bullish reversal, any kind of bullish reversal in the PCE and the core PCE data, or if there comes a hold in the PCE and the core PCE data, in that case, that will be seen as a bearish news, a negative news for the US stock market, for the S&P 500, for the Dow Jones, and for the Nasdaq. Clear? These are the 4 things. Now let's see how the S&P 500 is technically expected to move from on Monday, that will be June 26th, then Tuesday, Wednesday, Thursday, and Friday. That Friday will be June 30th. And guys, yes, there is one more thing that this is my S&P 500 knowledge transfer program. So if you want to learn about the S&P 500, the movement, the technicals, the strategies, the trend analysis, manipulation, technicals, predictions, support resistance levels, and much more, then you can join my S&P 500 knowledge transfer program. And I'm offering a flat 25% discount until June 30th for the program. So in the spreadsheet, I have given this the detailed information that what exactly I will teach you, what exactly I will tell you, and what exactly you are going to get. So guys, I've given the link to this S&P 500 knowledge transfer program in the description of the video and also in the comment section. Now guys, the technical movement, okay, this is the probable movement. So for now, okay, as I mentioned earlier, 4351 and 4343. 4351 and 4343. Okay, this is a very good support level, okay. This means that if on Monday, if there comes an open that is either in the zone or above the zone, what, in the zone or above the zone, what is the zone? 4343 and 4351. If there comes any open that is either in the zone or above the zone, in that case the S&P 500 can try to sustain. I'm not saying that the S&P 500 will be able to sustain. The reason is that the Dow Jones is not allowing the stock market to sustain. Rather, the Dow Jones want the stock market, the US stock market, to come down, right? So the only thing what can happen, okay, on this day is that the S&P 500 can at first, okay, the priority will not be to give any good bullish movement, but the priority will be to hold and to sustain above 4343 and 4351. This means that whenever it try to give a reversal, then this reversal will be again be limited to 4371. Okay. Now surprisingly, if it gives a bullish candle, means surprisingly if it gives a green candle in this particular case only, okay, if it gives a green candle, in that case it will be seen that as of now the S&P 500 want to remain above this good support zone, okay, and in that case the S&P 500 can even try to move further above 4371, but provided that the S&P 500 closes above 4371 on Monday. If that happens, then only the S&P 500 is allowed to move or to hold above 4371 and to move towards 4396. Okay, again the same theory and the same logic at 4396, okay, and so on. Now, because the Dow Jones is bringing the bearishness, this means that in this case also, if there comes an open that is in the zone or above the zone, then also after giving an initial upward movement, there are very good chances that it can fail in the second half or after any time, or means it can fail anytime and then it can come below 4343. As soon as it comes below 4343 and if it sustains there below 4343 for 1, 2 or 3 hours, this means that now this zone is done, okay, now this zone is not providing any more good support. And now the S&P 500 is further coming down to 4310. Okay, 4310. What is 4310? 4310 is the 61.8% of the Fibonacci retracement level. Okay, this means that it will find some good support here. Then the next support level will be 4291. 4291 is the golden resistance as well as support level. Okay, and as I mentioned earlier that no matter what, even if the S&P 500 breaches the 4291, then also it will be back to 4291. Okay, this is how the S&P 500 works, has worked historically. In my last S&P 500 weekly technical analysis, I've shown you the historical movement around 4291. Okay, this is how it works. Means it will be back to 4291 no matter what. Yes, it might take some time. It might give like this the bullish reversal and then, but it will be back to 4291. Okay. Now the strong support comes here at 4265. Okay, 4265 and 4291. This particular zone from 4265 to 4291. Whenever the S&P 500 comes down through any case or through any medium, whenever it comes down, this is where it is going to find support. After finding the support here, then you can see that the S&P 500 is trying to move up. Now, after finding support here, whenever it try to move up, then its upward movement will be limited to 4310. 4310. In that case, it has to prove that it can sustain and it can move above 4310. But as soon as it closes below 4310, then it will be seen as a rejection from the 61.8% Fibonacci retracement level. Okay. Now, even in the best case scenario, in that case, the bullish movement will be limited to 4343 and 4351. That's it. Okay. This is it. This is in the bull side. Now, in the bull side, it is not necessary. Okay. I'm saying that there are very good chances that anytime, okay, on Monday, anytime it can come down. But this is not 100% certain. There are very good chances because of the Dow Jones. Okay. This means that if the S&P 500 is able to hold and sustain above this the zone 4343 and 4351 on Monday, okay, and it closes as a green candle or maybe like a red candle, okay, then also, okay, it can try to sustain, okay, on Tuesday. Because see, the reason that why it will try to sustain and hold on Tuesday, the reason is that because in this particular case, okay, that we are discussing here, the S&P 500 has sustained on Monday. Because the S&P 500 has sustained and was able to hold above this the zone or in the zone, this means that on Tuesday there are good chances that it will be able to. If the S&P 500 does not give or does not give up, if the S&P 500, if it doesn't give up on Monday and Tuesday, in that case on Wednesday we can see a bullish reversal, or on Tuesday itself we can see a bullish reversal back to 4396 or 4371. So not to 4371 because it will be able to, but to 4396. Okay, that is there. Now there is one more important thing. Okay, whatever be the case, bullish, bearish candle, doesn't matter, because the stochastic RSI, it is coming down. Okay, as of now the K channel is 16 point something. When stochastic RSI, see, I cannot say exactly when. Okay, Monday, Tuesday, Wednesday, Thursday. Whenever it comes down and it hits absolute zero, that will be the very first indication that now a technical bullish retrace or a technical bullish reversal will be there in the picture. Just like what you have seen on last Thursday, there was a good bullish reversal because because the S&P 500 was under technical obligation through the 4-hourly chart. Okay. Now, this is the daily chart. This means that it will be under a technical obligation to give a bullish reversal or a bullish retrace. Okay, whatsoever be the condition. This means that, so yes, so if you are my Patreon community member, okay, in that case I will tell you that exactly when we are anticipating a bullish reversal. Now, for the stochastic RSI to hit the absolute zero, okay, what should happen is that on Monday, or yes, on Monday, okay, either there must come a red candle of any kind, okay, or a very thin bullish candle, okay, very small or very thin bullish candle. Okay, then on Tuesday also another red candle or a very small, very little bullish candle. If that happens, then only the stochastic RSI will be able to hit, okay, the absolute zero, the bottom. And then only the S&P 500 through these the technicals, okay, will be under this the technical obligation to give a bullish reversal. Okay. Now guys, there is one more interesting thing that I mentioned earlier, okay, when I was during or in the third point of the agenda of this S&P 500 weekly technical analysis. And what was that? Two things. Number one, that the S&P 500 was able to close above the moving average. Secondly, the small bearish movement in the S&P 500, it was it was there in order to avoid a crossover in the MACD. Okay, this means that the chances of sustaining, that the S&P 500 is sustaining above the zone 4343 and 4351, chances of this are very strong on Monday, very strong for Monday. Okay, because of these the two factors, right? Now, if there comes a small bearish candle or a small bullish candle or a thin bullish candle, in that case the MACD will give a bearish crossover, confirmed. Now in order to avoid this, the bearish crossover in the MACD on Monday, there must come a heavy bullish movement on Monday beyond 4371. Okay, that must be there. Then only this, the bearish crossover in the MACD will not be allowed. Rather, okay, it will simply slip, right? If that happens, in that case what will happen? In that case, yes, it can give a bullish reversal from here itself to 4396. Okay, and even beyond 4396. Okay, again, this will be a surprise, but technically this is true. Okay, because the technical indicators will support this move. So I have discussed these the cases. Now other than that, there is one more case. If there comes again the same condition, open equal to high, not just in S&P 500, even if it comes in the Dow Jones, open equal to high, and immediately upon open the Dow Jones or the S&P 500, okay, goes down. Okay, I'm not saying very heavily. Okay, even if it remains like just below the open price, okay, but it remains in this condition, open equal to high. This means that the S&P 500 and the Dow Jones, okay, are still under heavy bearishness or are still under heavy bearish pressure. And because of that pressure, and if for the entire day if it remains in that condition, then on Tuesday most likely we will see a gap down open and a bearish movement or a fall, right? Now just opposite to this condition, if there comes a condition where open equal to low, particularly on Monday, open equal to low, means there comes an open, immediately upon open it moves up. Why it can do that? Because of these are two reasons: bearish crossover in the MACD and because it was able to hold above the moving average. Okay, if there comes a condition open equal to low, immediately upon open it moves up, either Dow Jones or S&P 500 or both. In that case, what will happen? In that case, we will see that it is going to move up, and that at least for a day, 2 or 3 days, it will remain bullish. Now you might be thinking that because of this condition open equal to low, because of this the MACD and this thing, okay, for the entire week the S&P 500 will remain bullish, the Dow Jones will remain bullish. No, that is not the case. Why that is not the case? Because of the Dow Jones. Dow Jones will not allow that to happen. Why the Dow Jones will not allow that to happen? If we again if we look into this, if we look into the historical movement of the Dow Jones, okay, because on the weekly chart, through the weekly candle, open was equal to the high. Historically, what we have seen, historically this was the candle, open equal to high. What has happened? First it came down, it goes below the closing of the candle and the low of the candle, and then only it moved up, right? Then second, okay, this thing, this is what actually we are talking about here. In this, the case of S&P 500, this is what we are talking about. Okay, immediately upon open there was a condition of open equal to low, it moved up, and then surprisingly within a day or 2 days it gave up heavily. Third condition, okay, third time again the same open equal to high condition, a good bearish candle, but in this case the closing was also equal to the low of the candle. So we have seen a small, okay, there's the reversal and then a bearish, okay, candle. So what it indicates that all of these, the three cases historically have said, no matter what, there will be a bear movement. Either the S&P 500, okay, through the Dow Jones, either the S&P 500 give this the bearish movement on Monday and Tuesday, and then it can get a bullish reversal on Wednesday, Thursday, Friday, or it can move up on Monday, Tuesday, Wednesday, then within 1 to 2 days through the heavy profit booking it can give up, so that these conditions can be satisfied. This is as per the historical movement. So I have given you these the two movements, okay, through these the historical movement of the Dow Jones, and see why this will happen in the S&P 500. The reason is Dow Jones. Okay, remember the reason is Dow Jones. Again, day-to-day basis, okay, if you are my Patreon community member, then day-to-day basis, okay, as I analyze the Dow Jones, S&P 500 and Nasdaq every day, so I will give you, so I will tell you, okay, what we are expecting, right? But the condition of open equal to low, or open equal to high. Okay, this condition will define that how the S&P 500 is going to behave. Now one more thing, movement on Monday and Tuesday and Wednesday, Thursday, Friday. So we can divide the next week, okay, like this: Monday, Tuesday, and then Wednesday, Thursday, Friday. If there comes bearish movement on Monday, Tuesday, okay, then we need to see that when exactly the stochastic RSI, okay, it becomes saturated. Whenever it becomes saturated, there will be a bullish reversal no matter what. Okay, when there comes a bullish reversal, that will, so that day and the next day, then we will have to see whether the S&P 500 is holding or not. If it is holding, then for the bullish movement, not, then it will give up. Okay, but yes, 4291 will be there in the picture. It will be there in the picture. It is in the picture. It will remain in the picture no matter what. S&P 500 is still under technical obligation because it has moved up. It has to come back to 4291 so that it can try to move up. It can go bullish, or it can try to go bullish, once again. Although now the things are like 100% clear, there will be a mild recession. S&P 500 will be back to 3,500, 3,000 levels. And that this all thing, okay, all of these things are going to happen in next 1 year or 1.5 years, means by the end of 2024. Okay, this will happen, right? So guys, if you have not yet joined my Patreon community, and if you want to get the daily analysis, the daily updates of the S&P 500, then you can join my Patreon community. I've given the link in the description of the video. Other than that, guys, I'm giving this a flat 25% discount for my S&P 500 knowledge transfer program, and this discount is valid until June 30th only. So guys, if you have any questions that you want to ask, then please feel free to ask. And guys, if you have liked this video, then hit like, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So guys, this was my S&P 500 weekly technical analysis for the week of June 26th, 2023. That is from Monday, which is June 26th, through Friday, that will be June 30th. So whatever is going to happen in the S&P 500 until June 30th, Friday, I have mentioned in this S&P 500 weekly technical analysis.